got to start with the jobs report. 75 basis point rate hike. Inflation numbers on Wednesday surely are going to reinforce that. Bonds sold off again on Friday. Stocks don't seem to know quite where to go ahead of earnings. What's the key takeaway of the report on jobs, for example, for investors right now?
I think the key takeaway on jobs is that this is going to be difficult for the Fed. They've got to be frustrated here. If we just look at the math, I hear a lot of people saying, well, we've got to get participation rate up. Yeah, it's true. But where is that participation rate going to come from? There was this case that it was kind of immigration based, that COVID had restricted immigration. Well, actually, the BLS data is showing that foreign-born labor force has actually recovered pretty strongly. It's really the one group of people that is not participating strongly again is that 55 plus. And that's a very difficult group to get back to work in large numbers. You would have to get a participation rate of something like 45% to get unemployment up to where the Fed wants, let's say full employment at 5%. That's like 1948 numbers. It's just not going to happen, which means if we need to get to those kind of numbers for the Fed, it means a really steady job losses that they would have to orchestrate with higher rates, something to the tune of 185,000 a month for a year. It's going to be some mix of that, but this is the takeaway is this is going to be hard, and expect rates higher from them.
People in the U.S., people everywhere want to know, I think, when this U.S. stock market sell-off stops, because it seems to be reverberating in so many ways. Are we getting closer to the bottom? Again, with the supposition that the Fed is bound and determined to get inflation down, and if they slow the economy down to the extent of causing a recession, they're ready to do so.
Yeah, the key things we need to remember, their mandate is stable prices and full employment. And again, if they think full employment is more like 5% still, they have a long way to go. That means we're going to continue to see liquidity withdrawal, especially with quantitative tightening still in the mix here. And as they move rates higher, there's going to be the expectation that growth rolls over. So if liquidity coming out means still pressure on market multiples, and growth rolling over in the potential hit to earnings is still in our future, that means we are not at a bottom yet. And we should expect another difficult second half ahead of us until we get some kind of view that this is actually working and that they've gotten price rises under control.
Use that the patchiness of, there will be some patches, even if it is patchy when it comes to growth in emerging markets. Are you skeptical of that, even if we are potentially getting a lot more stimulus and bond sales out of China?
I am. I think the credit story in China will help the commodity story elsewhere. I think that's the way we should look at this. I don't think it's going to help necessarily Chinese equities anytime soon. We should be much more worried about COVID policy in China and what that means for domestic growth and spending. For emerging markets, look, for Latin America especially, they tried very hard to get ahead of the Fed, to get ahead of inflation, to be early hawkish. And it still really didn't work. The capital flows that we saw as the expectations of U.S. rates to rise were pretty strong, and inflation is still rising, and they're already at pretty high levels of overnight rates in many Latin American countries. They're going to have to really start to think about this growth, inflation, rates conundrum that they have, and emerging markets. Really, it's a beta play. It relies on growth. The economy needs growth to avoid poverty. And it's going to be a politically very difficult story for EM to handle. EM Asia, of course, still going to be hamstrung a bit by supply chain issues in the middle of the value chain.
Will you look at the political difficulties, and it's an understatement when you take a look at Sri Lanka, right? Is that something that markets should be focusing more on when it comes to the EM complex and potentially the room for more unraveling of this kind?
I have looked at this a bit. I think for now, the stories, the sort of more frontier stories that we're seeing in the emerging markets, I think they are relatively idiosyncratic at this point. That doesn't mean that kind of behavior couldn't spread. Look, we've got a stark move left in Latin America across most economies, and we still have an election ahead of us in Brazil. And new governments which are going to have to deal with what it means to try to put their platforms in place, especially if they want to focus less on energy sales in a time where that is actually what's saving the market. So it's going to be quite tough.